Hi, everyone. Welcome to Analyze Your Trade, episode number 35 for May 22nd, 2018. Tonight we will be discussing your trade ideas. Over the last few days, about 40 people submitted up to 5 symbols each, and I've put the list together, which you should see on your screen right now while I'm talking. My name is David Kosmeter. I'm the creator of Timing Research, and I developed the show with Dean Jenkins of Follow Me Trades, and he's here to moderate today, so I'm going to go ahead and turn it over to him.
Okay, hey, thanks, David. Good to be here again, and welcome, traders. Thanks for tuning in and for submitting your trade ideas. So you got a panel of 3 of us here. We're going to be analyzing the trades you're interested in, and you'll get a real variety of opinions on those trades. So hopefully you find it useful. And, you know, we may agree on some trades, we may disagree, but you'll get, again, a variety of analysis and opinions, and it's always fun. And so before we jump into the trades, we'll have the panelists introduce themselves and just 1 or 2 minutes about, you know, who you are and what your approach to the market is. So, Jim, if you would take a moment.
Sure. Thanks, Dean. I'm Jim Kenney. I provide the content over at OptionProfessor.com and have done so for many, many, many years. Basically educating the public on the uses and risks of the option trades, from buying the options to writing them, income producing strategies, hedging strategies, using them as a defensive tactic with other trades you might be doing, using them on a daily, weekly, monthly, and even long-term basis with leaps. And there's a lot to learn. So basically the DVDs are very helpful to get people up to speed on how these things work.
All right, and good to be back on the panel with you, Jim. We've done this many times. And Fausto, I think you and I did the crowd forecast show a couple years ago, but I don't think we've been on this panel before, so it's good to be here on a panel with you again, and good to have you on this show. If you take
it's great to see you again, and hopefully you've been doing great. And yeah, everyone, it's great to be back. My name is Fausto Pugliese, president and founder of Cybertrade University. Basically, a little bit about myself. Been educating for almost 25 years. One of the original day traders that started. If you read any of the old books, Souls Bandits, I'm actually one of them. Also the author of How to Beat Market Makers at Their Own Game. And I'm here to give you some insight on some of the trades that you have listed as more of a day trader. But, you know, it looks like some of these look more like more of a swing trader other than Micron, but we'll talk a little bit about it. But I'm looking forward to always being here on Timing Research and giving the insight, and always look forward to come back. So let's get it going.
All right. Hey, yeah, good to have you here, Fausto. And I'm Dean Jenkins, founder of FollowMeTrades.com. So I am a swing trader, you know, technical swing trader. I'm in stock and option trades, typically 4 to 6 weeks long. So a little bit longer horizon, and my analysis and opinion on some of these trades will reflect that. And again, you get a diversity of opinions on the panel. You know, shorter term, longer term. You know, and from Jim, the option professor, will bring his own unique analysis to it. So people are here to hear about these stocks. So let's jump right into them.
Oh, I also wanted to mention real fast that Todd Mitchell of Trading Concepts Inc. was supposed to join us as well today, but he wasn't able to. So we'll try to have him back soon.
Yeah. Okay. The 3 of us will try to hold our own here, and we hope Todd feels better really, really soon. All right. First up on the list is Tesla, and there's no lack of opinions on Tesla. A lot of ink being spilled, articles being written with the bulls and the bears. They write more about each other than they do the company, I think. But it's an interesting company, interesting stock, and I look forward to hearing the folks' input on that as well as giving mine. So, Jim, lead us off on Tesla, if you would.
Well, Tesla, obviously, back and forth, 255 the low, 375 about on the upside. So you had about a couple $100 range there. It got a bounce when they came out with some California law about new homes going solar. For some reason, they figured Tesla might benefit from that. But that seems to be a bit short-lived as we went on the defensive today, down about 9 points. It looks like a stock that could really come apart if it started to drop, because it has a heavy look to it, and this 300 neighborhood seems to be a tough nut to crack. So, we're underneath the 50-day at 296. We're underneath the 200-day at 327. I know this is kind of a Jim Jones stock where everybody drinks lemonade and then buys the stock. But I think it would not be something that I'd be very interested in unless you're looking at some macro thing where this guy, Musk, is going to be the Pied Piper for some kind of a new situation. And but right now, to me, it's on the defensive. If it can't get above 300, I wouldn't want any part of it. And it wouldn't shock to me if it would accelerate to the downside on bad news.
Okay. So sounds like a bearish bias, Jim, for you.
Stand aside or bearish.
Yeah. All right. Fausto, what you got on Elon's company?
Yeah, that I'm just going to share my screen with you and bring it up and just tell you a little bit about it. First of all, this is not a day trading stock. We pretty much don't look at this stock, but we do some swing trading. I do some swing trading, and look, and I can, looking at it as a like what happened today. Today was probably one of the very rarest days that you would day trade a stock like Tesla, but it was a great short. You could see how the stock just literally just tanked right at the open, right around here from 288 all the way back down to 176. It was a great short. I agree with Jimmy. Jim, this is, I've been bearish for the stock for a while. I just read a bad article on it today, actually, about their new car that they're coming out. There was the Model 3, and they keep postponing it. Believe it or not, I actually put a deposit on one a year and a half ago. I thought I would have had it last year. I'm thinking I get my deposit back after hearing all these things about it. They're having problems with braking. They said that the Ford F-150 could brake better than the Tesla 3. So they have some issues, and you can see the stock has been a pretty decent performer from 17 to 18. From 180 to 380. That's a huge jump, 200 points. So we're only down 100 from the highs, but like Jim said, if it doesn't break through 300, right now it's at major supports. You can see the stock going right back down to like 220. It's a very volatile stock. It's a good option stock. It's got great options to trade on it, but overall, I'm pretty bearish on it.
Okay, the two bears on Tesla. Yeah, and there has been some interesting news on it lately. I saw that Consumer Reports article that the braking on it's not good. Like you said, the F-150 can brake better than the Model 3. That's bizarre. And Elon Musk earlier this week had the whole deal was Model 3 is going to be our mass market car, and that's going to we're going to sell volume and make profit on that. And he just said, hey, the $35,000 model ain't going to happen. We can't make money on the base models. We're not going to build it. Pretty big shock to the market and to the
but look, let me just add something in there. It's not a $37,000 model. It's really $70,000 if you add all the options. I looked at it, and they're trying to launch the one at $47,000. Yep. So they give everyone this illusion it's going to be, I don't know what a $37,000 car is going to get you, but it's not really what they're hoping for. And
he basically said, by the way, we're not even going to build those. You can't get the $37,000 car. Right.
Yeah, they actually, I went to Tesla and they said you can get it, but it's like a year and a half from now. That's like once they sell the 70,000 and the $47,000 ones first, whatever.
So for me, looking at the chart, I agree. It's definitely bearish. In the short term, short term for me is the last 30 to 45 days. It's putting in a series of lows and could not put in new highs. Now it's putting in new lows. And it's, I look at the Ichimoku cloud. I use a little Elliott wave. I use the 200 simple moving average, right? It's well under the 200 moving average, putting in new lows. It's under the Ichimoku cloud. We got negative momentum. So it looks nice for a short. I saw Fausto. It looks like you're using TradeStation. I am too. And next to the symbol here, the watermark in the middle of the page, in parentheses, it says HB. That means that's TradeStation's nomenclature for saying hard to borrow. So here's this thing that's got a float of 170 million shares, and it's hard for TradeStation to short them. They can't go borrow the shares, and the reason is the short ratio is 4.7. Fully a third of the float is already short, which that can set up a short squeeze. So I'd be very careful about shorting it, because as soon as you short it, all the short players can then start buying back and drive it up just based on that action. So I like to a short squeeze down at the bottom and going long, not trying to catch it early going down. So I would avoid it. I think the chart's bearish, but I'm a little worried about those ratios in terms of the number of shares already held short. So I would be a pass on Tesla. Next up, Facebook. How could we do a panel and not talk about Facebook, right? And I think Mark wrapped up his testimony over in the Eurozone today. I haven't heard any headlines of whether he did well or botched it, but Jim, where are you at on Facebook?
Well, I had the bad news, obviously, and the potential of misusing information from the consumer. And I was a little surprised, frankly, that it got much past where the gap was around 180. So it is up, in the 183 area, and it's back above its moving averages, I believe. Let me just double check. Yeah, the 50 days at 170 and the 200 days at 175. So the averages are still inverted, even though the market's gone way up. It did fill in that gap around 180. So this neighborhood here would be a very key area to me. If you're going to be selling it or doing anything negative with it, this would be the neighborhood to do it and see if it fails from here. Because obviously 195 has been the 52-week high, so there's not that much real estate between here and 195. And if the news changes a little bit over to liability of misusing the data and gets away from whatever that's gone on right now, I think it could be vulnerable up here. Again, strong because it's above the moving averages, 170 and 175, so that's good news. And so this would be a very speculative selling up here in the 185 area. And you'd only be doing it because you think it's overrun through the gap at 180 and it might roll over. But, if he comes out smelling like a rose and they monetize all those other businesses they own, this could be a $200 stock. But if this NASDAQ and the other broad-based indexes cannot take out their resistance zones and go higher like the Russell, then it's going to have a hard time taking that out. But if it gets back on the bicycle, the NASDAQ and the S&P starts following the Russell into new highs, or at least go in that direction, I wouldn't want to be shorting Facebook at that point. But I'd keep it on a short leash if I was going to hit it down here. And I might even wait for some weakness to see if it's going to go back down under 180.
All right. So it sounds like you're a pass on it right now.
Pass, but but if it starts breaking down, I'd get back on the sell train.
Okay. Fausto, do you like?
Let me
like
bring it up and tell you what I'm looking at. So basically, I'm looking at this stock, and it had a hell of a run from April. My God, this thing had a huge rally, almost like 40 points, but it is testing major resistance levels. So I'll be a little cautious on that. Let me tell you my big concern about all these marketing companies. Did you guys hear what happened with what's going on that's coming into effect this Friday with the EU? That you no longer cannot email unless you have authorization of anybody that is in the EU. I don't know if you guys heard about that.
Yes. Yeah.
And it's been kind of quiet, but I think a lot of these marketing companies are scrambling right now, knowing what they're going to do, that they're going to have hefty, hefty fines if anybody contacts anybody from the EU. I'm talking about Italy, France, anybody without their consent. And I don't know how Facebook's going to deal with it, but they make a lot of money in their advertising, and I think it could affect them a little bit. I mean, a lot. I'll see what happens on Friday. But I would be really cautious. It's testing some major resistance levels right here. And let's see what happens with that. Regardless of you guys talking about the rules, what happened with them with their compliance and just divulging private information. I'll see there's another headache that's coming up on everybody's doorstep now.
Yeah. I'm certainly keenly aware of what is it, GPDI compliance, I think is the acronym for the new Eurozone regulations. Yeah. In terms of my analysis on Facebook, I'm pretty much with Jim. It's real simple. It's too late to go long and it's too early to go short. And the only trade I would take would be a short if we get a better short setup breaking down through the support areas, and we're not there yet. So I'm a pass on Facebook. Next is Square, pretty interesting company. You can't go to a small restaurant or a newer small restaurant or taco stand and not see somebody using their technology. It's pretty cool. But What do you think about the chart, the trade here on Square, Jim?
Yeah, again, it's right at the high here. So, 54.55 is not too far from the 52-week high. And obviously, it's a stock that in the last year and a half, 18 months, has gone from 15 up to almost 60. So you're not early to the party here. If you believe that these guys are going to, be one of the big point of sale guys in that industry, you can just see the kind of money that Visa and MasterCard do. And you could say that this group may have significant potential on the upside. Some people were saying that if they had a choice between this one and PayPal, they'd go with the PayPal, though. I don't know. I'm not an expert in this sector, but the stock obviously is uptrending. It has great news. The only thing I would say, it seems to be getting a little bit overbought. It's $20 above its 200-day moving average, so that's a yellow flag in my world, because I don't like to get into things that are, $18 above 39 or so. So you're 50% above its moving average. So, if I was a guessing man, I would say that there could be a little bit of a pullback in our future with this thing because of its 40% or so, 50% or so above its 200-day average. When I've seen that, whether it be Boeing or any other company, whatever, how great it looks, however wonderful the story is, for whatever reason, something does occur and sometimes does bring these things back closer to their mean. So if I had to look at if I was investigating this stock right now as a trading situation, I'd be looking at what the puts might do for me, and I would look for a chart formation that would tell me that we have some exhaustion up here. And if I saw some exhaustion on a chart formation, I would not be against the concept of throwing some money at the put side.
All right. And Fausto, Square.
Yeah, I mean, Square has been a fun stock for us to day trade. We've been day trading Square for a long time. You could see here on the intraday chart, it's just been, it's got some big moves early in the morning, the first 2 hours. We've been trading Square. If you go back and look us up on our YouTube channel, I've been promoting Square for the past year and a half. And specifically right here, back in October 17, this is when they said they were coming out with a new technology with you're going to be able to use Square for cryptocurrency, something like that. And that made a big rally in that stock. And this is a great company. Overall, as an actual technician looking at it, it took a big dive. It broke a higher high. It took another dive. It's not breaking the previous higher high, which is not a good sign. Okay, so unless it can get past that all-time high, it's going to probably be stagnant here for a while. But it's got to break all-time highs. It's been a fun stock to day trade. You got to be pretty advanced to trade it. But as a swing trader, I mean, if it doesn't break this major resistance levels that we're looking up back over here, which is right around the $57, $58. You could probably see it back off again. But overall, I would probably sit tight and maybe not trade it as of right now as a swing trade. As an investor, but as a day trade, you can still trade it.
All right. And I think I agree with both of you. And, I'm more of a swing trader longer term. And I see this resistance area at the previous high back in early March, it looks like, or late March, actually. So it's coming into there, it's consolidating. It's above support level, so for me, too late to go long, particularly with that ceiling hanging over it, and way too early to try and take a short. It is going sideways the last couple of weeks, and no pattern, no sign of it breaking down yet. So nothing there for me on Square. All right, the big yellow cat machine. Gonna get bulldozed here, or is there something to trade, Jim?
Well, just let me take a look here real quick. And it's a positive looking stock technically here. I mean, I got the 200-day average at 142, and I'm sure it's rising. And I got the 200-day at 149. So they're inverted and they're going high, and they're moving both to the upside. This thing was supposed to get in trouble when they guided to this is as good as it's going to get. I guess they said something about that looking forward. And then people got a little negative on the stock, and it came down here towards 145 area, I guess. So right now it's down today 272. There's a decent amount of room. It was about $18 above its moving average. On a percentage basis, that would have meant about 12, 13% above it. So it's a little bit overbought. That's probably why it's backing off. I would say that, this thing is more neutral right this second, and with the possibility of a bit of a dip. I think it's going to follow whatever the major indexes do. So if we get the S&P blowing through 2760, going through 2800, this thing is one of the ones that are going to go up, and probably maybe even go up towards 180. And then, of course, if these averages were to give it up, this would be one of the casualties. So as the S&P goes, probably this thing goes as well.
Okay, high correlation to the S&P 500.
I think so.
Bulldozers for you, Fausto?
Yeah, Caterpillar has been it's been one of the Trump bump stocks. You could see here back in October when the stock was at 120. I mean, it was even lower than that. Stock had a great rally. It's now starting to hit what's called a triple top. It's having a tough time breaking this 160. If it doesn't break this 160, it's going to come right back down. But it's been hovering here for the past, almost a year. It's not really going anywhere. So I think it's kind of a, it's if you own it now, it's definitely a sell. But if it comes down, it won't come down that much. Maybe, what was it, 15 points to the next support level. But, as of right now, I would move my money someplace more wisely. It's an expensive stock, and like I said, you've been trading in a trading range. It's been a great short-term swing trade, but overall as an investment, it's kind of a neutral.
All right. Yeah, for me as a swing trader, I just don't see any setup. I certainly wouldn't go long, like that triple top that Fausto pointed out, and even the all-time high, not too far away. But there's support under it, so it probably will continue in a kind of a medium to narrow range, swinging until there's new information. And I agree with Jim. I think it probably is correlated with the indexes, and that may be what the S&P 500 is going to do for a while as well. So nothing compelling for me on Caterpillar. Now, I think I've said that on every single trade so far. None of them have lit us up where people go, man, I'm in tomorrow at the open. The whole market's kind of like this. It's getting harder and harder to find good breakout trades, but they're out there. And later in the show, I'll show a couple that I like. I actually do like some trades. But let's keep moving down the list here. Micron.
Yeah, Micron's back at it. I don't know when it was. A little while back, I was on one of these things with Dean. I guess it was last November, and it was trading at 50, and the moving averages were way down into the 35 area, and we both were saying that it was overbought and probably was going to close the gap between the price and the moving average a bit. And we saw about a $10 drop from 50 down to 40, and then it goes sideways for a while and has a big run up here to the 60 area. Then it comes all the way back down to 45, and now it's back on the bicycle. It gapped up today. So there's a nice gap between 55 and 57 or 50, whatever, in between there. And this is a company that obviously is volatile with a bias to the upside. And on the technical basis, let's take a look at the moving averages right now. And let's see what we got here. We got 43. And so this thing is trading, 56 now? So you're about 13. And so you are, about 30% above the moving average. So between coming up against the all-time high here, or the high that it's been on recently, and the fact that it's getting 30% away from the average again, but the volume is really telling you that the believers are plowing in here. 50-day moving average volume is 55 million shares a day, and the 200 days only 42 million. So there's not much to say negatively about this company because the volume has been huge, which means the believers are coming in and the price is accelerating and the moving averages are inverted to the upside. So the only thing you can say is it's coming against the all-time high, which may or may not stop it. And then also you could say that it's a bit overbought because it's about 30% above its 200-day moving average. But obviously the momentum on this thing is very strong. And at this particular moment we're speaking, there's not a lot of cracks in the armor.
All right. And Fausto, I'll bet you've been day trading this one, huh? This is a popular stock, big option.
Yeah, this has been a fun stock to day trade lately. We've been day trading this stock for the past 2 weeks. The stock was at 45. You can see it went all the way to 60. You could just see here from 9:30, this stock went from literally went from like 50, what is that, 58, 50, all the way up to about 60. It was a great short, hit resistance from pre-market, came right back down, hit previous support levels from pre-market, went right back. So it's been a real fun day trade. Overall, as a swing trade, listen, we've been trading this stock a while. Some of the people have been saying they've been trying to shadow this compared to AMD and what's the other one? NVIDIA. Yeah, NVIDIA. So because they're really big with their video, gaming video cards. NVIDIA's still killing it with technology and stuff. So Micron's trying to like tap into that. But it's overall, as regardless what the story is, it's testing major resistance levels, and you could see it. It's got to break this resistance levels right around here, right around the 60, and it looked like it just basically touched it, and bam, it came right back down. So that's not really. That just shows you it's got a real tough time. And one of the big things that we teach you at Cybertrade University, one thing I noticed because we were trading the stock very heavily today, there's some big orders. You can see right here on the right, we use what's called the matrix. And one of the big things I teach is high frequency trading. This is what we call our level 3. And we had some big orders, people just dumping it, just holding it right there. Unless somebody takes those guys out, this thing was not going any higher. So overall, listen, if I had the stock right now, I would sell it. If it breaks the 60, I'll buy it back, but you had a really nice run. Just very similar. I know we're not going to be talking about it, but this looks very similar to what happened with WWE, World Wrestling Entertainment. That thing just looks exactly like the same thing. That thing took off, and it started back off today. Same story.
Okay, yeah, and I'm with you. It's hitting resistance. I would not go long, and it's not set up for a short yet either. So this is a stand aside and wait. On this one. No trade here for me. So we've made it through 5 symbols. We did it pretty quick. That's awesome. And again, none of us has our hair on fire for anything we've looked at so far. Why don't we peel back a minute and just offer up a couple trades that we do like? Maybe share something that has a good setup that you see coming, or something like that, so we can at least sound a little bit positive, not like total downers. Jim, what are you looking at? What's got your attention?
Well, I mean, there's not a whole lot, to be honest. I mean, if you look at the oil stocks have had very big runs, but you wonder if they're getting a little exhausted up here. The banking stocks, look like the blooms come off the rose on those pretty well. I mean, that Goldman Sachs, doesn't seem to be able to get above 250, and so the themes for the year: emerging market, Europe, the banks. Those themes seem to have taken off on vacation. So there's not a whole lot of stuff going on. One thing that did perk up on the commodity sector, and I don't know how many stocks are in this kind of a thing, but the agricultural markets, that might be why Cat was doing pretty good for a while, or John Deere, with the China, U.S. putting some ice water on the tariff idea. Agricultural situations have got a bit of a bid here lately, and on the long-term moving averages, they seem to be turned to the upside. So out of all the things out there, everything else is pretty much on the lead. The 10-year note is right around 310, so it's really, just hanging around. The transports tried to make a run, but today they rolled over by 125 points. The Russell seems to be taking off, but as far as evaluation, I was listening to somebody who said that only 98% of the time in the last 28 years, the Russell had better valuations than it does now, which to me sounds like it's a very, fully valued, overvalued sector. Obviously, the tax cut's supposed to help the small cap, so that's why the Russell obviously has been doing well, making new highs. But with the valuations that I've been reading about, I wonder how long that'll last as well. So there's a lot of stuff here. Until we get a resolution, it's kind of a rough racket to come out and pound the table on too much stuff, because things either seem to be coming off their bloom, or they're waiting for more news to get back onto something. So, that's I don't see a whole lot of stuff out here to pound the table on.
Okay, time for you to, sometimes the best trade, the most profitable trade is cash, right?
It's not a bad option sometimes.
Yeah. So Fausto, what do you like?
Yeah, I mean, there's a lot. Let me just share my screen with you. We've been trading a lot that's been going on regarding a couple of few stocks that been coming from everywhere. First of all, like today, we did pretty well on day trading the stock FWP. Let me just bring that up here. Oops, typed in the wrong window. FWP. There we go. So you can see that here. I've been noticing there's been a lot of inexpensive stocks in the last couple of days that have been taking off. A lot of these stocks have been took big hits. You can see here from 30 all the way down to about $1. I mean, some of $2.50 to $4. Great pop, got halted so many times. I'm seeing a lot of stocks getting halted, and I'm noticing a lot of program trading. A lot of program trading has been kicking in lately. A lot of stocks getting halted. There's been a lot of program trading has been kicking in, and a lot of short squeeze has been happening, but they've been out there. This one's doing pretty well. Gurn has been another one. Another inexpensive stock's been doing pretty well. The stock took a nice little run also. But a couple of the brand name stocks that some of you probably more familiar with, we've been watching and trading on a swing trade. Shake Shack. Shake Shack's been came out with some great earnings. We've been trading that a while ago, and it popped out, built a nice little what we call a little Fausto flag right there in Shake Shack. That one did pretty well. And Ferrari, I've been talking about that for a long, long time here on the show. And Ferrari just all of a sudden, they said they're sold out to 2019. Stock went from 120 to 140. It backed off right here. It's going to probably test the 130s, which is a major support level. See what happens right there. That one's done very well. Been a big fan of that for a long, long time on this show. And one stock that took off today that I've been a very big fan on a swing trade, and also was a day trade, which was IQ. Here's a company that just went public, and IQ is the China's Netflix that came out. Baidu basically gained like $1 billion, something like that. Came out with some really good news today, and took a little bit of a hit. Stock, you can see it's very, very new, but it's going to be testing. Looks like it's going to be testing in major resistance levels, but pretty volatile stock. Today was a day trade. Not that many shares outstanding, so this is really pretty much the one that my team, my traders have been watching overall. But overall, the market, I mean, we're testing some major resistance levels right now, so I'm kind of a little iffy on the long term. But if you guys ever get nervous, I always tell everybody. There's one good stock, CSQ. I don't know if you guys ever saw this one. When I tell people if you want to be in cash, this is the greatest stock to do it. Pays you 8% interest a year, and it's a mutual fund that pays you pretty well. So whenever I tell anyone get nervous, these are pretty good stocks to kind of jump in, and it's been making a little bit of a nice little comeback. But 8% a year is not bad on every month they pay you. But as something more on the speculative side, those other ones that I called out are pretty good.
All right. Yeah, I think there's plenty of good trading ideas, but it's you got to go look off in the corners of the market. It's not in the marquee areas. And just like you noticed, Fausto, that there's been some pretty dramatic price moves on small cap and low price stocks, and I love trading those as long as they have good liquidity. And I'm showing a chart right here that we're in. This is CLNE. It's Clean Energy Corp. They're a LNG distributor out on the West Coast. And regardless of their story, we got long on this thing at this light blue line, 209. We're sitting up here at 266. About a week later, we're about we're trading this with a call option. We've nearly doubled it. So these are fun trades, right? And these things are moving dramatically. And these small caps with the one of the scans I'm doing is with the Russell going and putting in new highs. I go look for laggards, laggards that are in the sector, in the index, but weren't going up with the rest of it. Now they're turned and are catching up. and we've got several breakouts here. And I'm also pretty interested. I see silver. The silver ETF is on our list here if we get that far. I'm not that excited about either SLV or GLD at this time, but some of the individual miners are looking really good, and we're long Tahoe, which is a silver company, and yeah, they got a strike going on, but it looks like it's going to get resolved. They were up nearly 6% today, and this looks like it could really break out up to about $8 from where it's at 5. So that's a nice one. We're also in Wheaton precious metals, and there's still room to get in this one. We got a target on Wheaton at 29.47, and it's currently at 21.75, and still plenty of time and room to get in on that Wheaton precious metals. So those are a couple, small cap and precious metals, individual ones. There's some that are terrible, but there's some jewels in that mix, in my opinion.
Yeah, and Dean,
Right.
the gold to silver ratio, which was around 80 to 82 to 1, gold dropped down towards 1280, and the silver didn't drop very much at all. I think partly because of the valuation being so favorable for the silver against the gold.
Yeah, I've noticed that. Gold is surprisingly, with all the uncertainty, gold's been dropping pretty steadily. But you're right, silver has not.
There was a gap on the weekly graph going back a couple of years, and a couple of other graphs that was right around 1270 to 1280, and it did hit the 1280, so it kind of hit the top of a gap down there. And if it can hold this 1275, 1280, and the winds of change blow a little bit, I think it's a very invested area. And underinvested areas like oil, when it's way down, sometimes have some potential. So I'd probably still keep an eye on the metals, even though they've been no friend to the bulls. I think these corrections that they're having now, these pullbacks, if they hold, and if you get some winds of change blowing, there could be some potential. Maybe some of these stocks on the metals are indicating that those winds of change may be starting.
Yeah, and again, I like the miners. The price of a gold or silver mining company is not perfectly tied to the price of the asset either. There's a lot of other factors in play. So there's some exciting trading potential there. Let's get back on the train, and next up here is Twitter. That's you, Jim.
Also known as a one-way conversation with anyone you'd like to call, right? Anyway, on Twitter, you're at 32.86 today. It was up higher, then it rolled over at the end of the day, ending up about 2.25% lower. Again, it looks like it's up, trying to attack that 35 to 37 where the high zone was. And right now, it looks like at this point it's stalled out a little bit. What I've heard about Twitter is that it monetized itself much better than it had, but it's not a limitless monetization, and so some people are concerned that a lot of what they can monetize has already been done. But it does have an inverted moving average. 31 is the 50-day, and 24 is the 200-day, so that's a good thing. And the volume's been good. 28 million average 50-day, 22 million 200-day. So, stepping in front of it doesn't look like it makes too much sense. And the difference between the 34 area and where the moving average is 24 would probably be my biggest concern, because that is 41% above its 200-day average. So if I had to do something with it, I would use 36 as a defendable point. I'd be looking to see if I can get some kind of an exhaustion on this rally here. And if it did roll over, doing something on the sell side would make some sense. And if it takes out those lows of 28, then it could go all the way down to 20. So there's some vulnerability up here because of its overbought condition, in my opinion. And there's some vulnerability because it's so close to where the former high was. Those are the two main vulnerabilities here. And then, of course, it has a formation on the chart where if it were to take out the 28 area, let's call it that, that would be, and if it happened on some kind of news, the stock could see some significant selling. So I'd keep an eye on it and use that 36 to defend against.
All right. You got an opinion. That's for sure on Twitter. Fausto, where you at?
Yeah, Twitter does trade a little bit the market. I mean, even like the last hour when we dropped 140 points on the Dow, you could see Twitter kind of trade side by side with it. It's been a fun day trade lately. Rumor has it that the owner of whatchamacallit of Tesla can't stand the owner. He wanted to buy the company out. I don't know if you guys heard that. That was hysterical. And it kind of like made this big little rally happen in Twitter. But he's rich enough that he could buy the whole company if he wanted to. But there's rumor, that it could be a little bit of a hostile takeover in Twitter. But overall, I mean, they kind of learned how to monetize themselves from what I heard. It's been a fun stock to day trade overall and swing trade. But it's testing major resistance levels. It is breaking a little bit of a higher high, but I would not be a buyer until it breaks, maybe 34 and a half, maybe, and might get out at 36. But it's a very, very hard stock to trade. You could see over the course of the year, it's just been, when news came out, it just went from the 26 up to about the 36 and then tanked all the way back down to 26. So it's pretty volatile on overall, but as an investment, I don't really see it yet unless it breaks out at a new high. So right now I'm kind of neutral on it.
Okay. Yeah. So part of my analysis, I use a very simple, repeatable approach to Elliott Wave, and I combine it with Ichimoku Cloud and some price action analysis. And on Twitter, I hate the company. I just hate the app. I don't like using it. I never read it. There's just something about it that sets my teeth on edge. But I recognize that it's very popular, and as Fausto said, they have managed to monetize it somehow. But from a technical standpoint, we have a really clear, Elliott Wave is just all about looking for impulsive moves. There's a very clear impulsive move, from 15 to over 35. I think you would call that impulsive, and it happened in less than a year. A nice A, B, C correction into wave 4, right into a Fibonacci retracement zone, and then very clear high, higher low, new highs forming above the Ichimoku Cloud, positive momentum. This, this is a Elliott Wave 5, a continuation of the original trend up above 39. Now, it's not going to go in a straight line like I just drew. It could pull clear back here to the Ichimoku Cloud, find support, and then continue up like this. But it's pretty clear. This is the best chart I've seen so far today. I'm sure all of the other panelists, you've been in this situation, though. I pointed out a very clear bullish pattern here. Really, using my analysis, there's no arguments against it, but I ain't going long Twitter. There's just something in the back of my mind bothering me. I don't like it. And so if it's going to make me uncomfortable and make me wake up in the middle of the night, I'll go find something else to trade. But the setup is definitely there for me. But I ain't going to do it. So that's my take on Twitter. XBI. That sounds like an ETF of some flavor.
XDI?
XB. X-Ray Boy India. Yeah, Spider Biotech. All right.
Yeah, I was just looking at biotech actually, and pharma, and I think one of Fausto's ideas were in that sector, and then that sector has definitely been coming back. So there's definitely some bids going on in there. Right now, this company's at 92.21. It was up today. In the aftermarket, it's down about a nickel. It's close to its high of about 98. And like I say, this thing has been going on and on and on. And right now, the averages are at 86 and 89. They're inverted and pointing up. So it's not overbought by any stretch of the imagination. The short interest is the thing that sticks out to me here. I'm looking at short interest at 55% of the underlying stock. So Tom, Dick, and Harry are either hedged or doing some kind of selling on this thing. That can create a significant amount of buying if they all change their mind at the same time. So if it can blow out the highs here, obviously with that kind of short interest, that'd be kind of that would be kind of dangerous. The volume's kind of flat, nothing to write home about. It's definitely a market that looks up right now, and the line in the sand, far as I can see, would be about that 86 area where the 200-day average is. So I wouldn't give it a whole lot of rope, but if it takes out the highs, 105 or higher could certainly be in the cards. And it does have a positive bias to it based on the averages. And the sector itself seems to be doing pretty good. So it does have things going for it. So I would be neutral to positive on this right now.
All right. Fausto, XBI, the biotech ETF.
Yeah, I mean that whole industry's just been on fire, but it hasn't. The only thing I looked at the stock a while ago, and I wasn't that impressed that it didn't follow through as well as some of the other biotechs that I saw that were moving. But you know, it's been in the past year. You can see it's been trading in a range. You know, it's been hitting like 84.96, 84.96. You know, it looks like it didn't break a previous high, and you know, right around here when you're looking at that high right there around 94, and it's starting to back off a little bit. So I'm kind of a neutral on it right now. I mean, even with the Dow down today, it didn't really hurt it that much. I mean, it's still strong, you know, being positive, closing positive compared to the overall market. But I don't know. I think I would take my money and do something else with it than be stuck in this one.
All right, and I'm with you on that. You know, it is an ETF for biotech. I think there's better plays in individuals. Sometimes the ETF is an advantage, but you know, the smaller cap individual pharmas have been doing better. Some of the big boys have been getting hammered, and you know, I think you see that in the ETF where it's just kind of all over the place in the last 6 months. I'm in 2 smaller cap biotech, you know, pharma related, and they're great. I would avoid XBI at this point in time. Like you said, Fausto, I think there's better places to go put your money rather than tie it up in something that's just going up and down and nowhere. All right, next up is Apple. Company I love to hate.
Yeah, like they say, bad-mouthing Apple's like bad-mouthing Santa Claus. You can't do it. And again, the stock has just gone, you know, very much up after its announcements. And then, of course, Buffett saying that he picked up so many shares in the first quarter. Of course, the first quarter, the stock wasn't trading quite this high, but he definitely outlined a case on all his interviews that the stock is very, very interesting to him because of the way they spit out so much money and all that kind of stuff. As far as right this second getting into it, you're 200 days way down at 168, so you're about $20 above. In terms of percentages, it's about 11-12% above its moving average, so it's a little bit on the overbought side. It looks like it should have a lot of support at 180 because those were the former highs that it had a hard time getting through. And yeah, basically, it's a company. The volume is not off the chart on a 50-day basis versus 200-day basis, so that's not that helpful. But this is a company where you're obviously betting that just people will continue to buy their products. They'll keep coming out with products. They'll expand or maybe use some of that money for some either obviously their share buyback. So you got them buying back shares. So it's a tough thing to be negative on at all. As far as right now, I'd probably rather be buying it towards 180 than I would up here.
All right. And Fausto, what do you think of Apple, man?
You know, listen, Apple had a huge run up, and you know what? As much as this stock gets bashed and beat up, and you know, Samsung just came out with a commercial, just embarrassing it. It doesn't stop, and Apple's still very strong. You know, now with this the new Trump tax that came up, and you know, people now corporations could bring their money from overseas back to the U.S. I mean, I didn't realize how wealthy Apple, how much money they were sitting overseas. Were they bringing back like $300 billion back? If it was $400 billion, something like that, on that new tax rate. So obviously they're going to invest a lot more money. You know, they're very wealthy. Who knows? They might be buying back their stock. But you know, regardless of what they're doing, listen, when a company gets bashed and all it does is keeps performing, you know, I don't think anyone's going to be surrendering their iPhone, you know, anytime soon. So, you know, overall, I think it's probably more of a swing trade on the bullish side, but definitely not bearish on it. There's nothing that shows me that the stock's backing off.
All right. Yeah, I mean, it's definitely putting in new highs. It's definitely in a bullish move. And it's also, you know, 2 years into this bullish move. And so, you know, I'm a swing trader and I'm looking for, you know, the next breakout. And I don't think there's going to be a breakout on Apple. It may inch up, but I'm looking for breakout trades, and this ain't it for me. So, it's a little late for me to think about going long on Apple, and it's, certainly there's no case for going short on it, as has been articulated very well. I think we got time for one more round and then some wrap-ups. I'm looking down at what we got here. Let's jump. Let's do IWM. We've talked about the Russell a few times. Let's dig into the Russell ETF here.
Well, I'll tell you, that also fits into the KRE, which was the next one on the list, because that's a regional bank, so that'd be smaller stock, and that's made a new 52-week high today, and they are supposed to be one of the better recipients of all the dereg and also the tax cut. So the Russell and the KRE are kind of, Hansel and Gretel going on the trip with each other, Again, the only concern I have with the Russell is the valuation that I heard about, which was that this guy was pretty sharp. I think it was from Colombia, but he also runs a hedge fund, and he had some pretty good information, I thought, as far as, at least he, had put work into it. 28-year study on the valuation, and he said on the S&P it's 85 percentile. 15 percentile, which means 85% of the time that you had better valuation on the S&P than you do today. And on the Russell, it was a 2 percentile, which means 98% of the time in the last 28 years, you've had a better valuation than today. So when I hear stuff like that, and I hear the all-time high, and I see the situation, that's the only thing that would give me pause with anything that looks this strong, is the valuations, if they're that rich, and they cannot be sustained. That would be the only negative. Right now we're at 160, 163, 162 area. The 200-day average is way down at 150. So where are you? You're about, you're not tremendously overbought, but you're a little bit overbought. And the volume is not really confirming the move. 50-day volume on this is about 20 million shares a day versus 23, 24 million on a 200-day. So while you've made these new highs, the volume is not screaming like it is on some of those other ones we mentioned. And that would be another caution flag. So the valuation of the Russell and the volume not exactly kicking it right here. The short interest at 30%, though, that might explain why it's gone up. There could be a lot of people throwing in the towel on the shorting of it. And after they finish throwing in the towel, if there's nobody behind them to buy, it could fall under its own weight. So I'd be careful on the Russell, only because of valuation and the volume not being that great. And if this is a short covering rally, which it very well may be, when those shorts are done, you got to have buyers behind it. And if you don't, that's a problem.
All right, so very, very skeptical. Doesn't sound like you're putting your money along on the Russell just today.
I would be looking elsewhere.
All right, Fausto, small caps.
Let me tell you, I'm a huge small cap fan. I mean, I was born and raised as a NASDAQ trader and everything else, and the Russell has just been a great performer. I think that it's what you're looking at right now. The stock, the Russell does look higher. I would be very, very, focused extremely, because a lot of you just talking about the banks. I don't know if you guys are aware of it, but they were saying this week the Congress is going into a vote regarding about rescinding Dodd-Frank. And for all the listeners out there, I don't know if you know what Dodd-Frank is, but basically, in short term, in layman terms, basically, small banks had to comply with the same rules and regulations as big banks, and and it's harder for them to lend money. Well, they're looking to get rid of Dodd-Frank, and a lot of these small banks, and a lot of them do trade on the Russell, might just keep your eyes open that it's going to free up a lot of cash. They're going to be able to do a lot more than the big banks can do. Obviously, listen, we could, it's not more of a debate on it, but when you really think of it, it could really take off. So I'm a big fan. I think the Russell is still cheap. It's been cheap since I've been watching it for the past 2 years. Dow took off tremendously, but you get more bang for your buck when you trade the Russell.
All right. And I'm a big fan of small caps too. I think there's better trades in some of the individuals than trying to trade the index right now with it at all-time highs. And you can see these legs it takes up, and then it pulls back to the average, and it goes up, pulls back to the average. So, it's just following this pattern we've been in for, pretty much the whole year. You would expect pretty quick another pull back to support. So I wouldn't be going long on the average, but I am definitely long on individual small cap trades.
Cool.
And one other thing is, obviously, on some of these things, they've already doubled in price. So it could be a buy the rumor, sell the fact kind of deal, too. You got to be careful of that, too.
Yes. All right. Well, hey, we're just about out of time. I want to go back around one more time. If you guys just have any closing thoughts, there's a link you wanted to share or a page or something like that, this would be the perfect time to do that. So back to you, Jim.
Sure, yeah, I just wanted to invite everybody. First of all, I want to thank you guys for having me here. I enjoy it every time. And Fausto, I haven't been there with you a few times, but a lot of information, good information. Thank you very much. The Gmail address that you can shoot an email if you're interested in learning more about the options, finding out more about what we're doing, simply optionprofessor@gmail.com. We'd be more than happy to get information out to you. And, like I've been telling people since January, that January move we saw to almost 2,900 on the S&P did smell a little bit like a blow-off because it got so overbought. And this trading range that we've been in since is of no surprise to me. And this trading range at some point will resolve itself. And I think right now your 2760 S&P, 2,800 on the top end, and your 2580 on the downside. When and if we can take out these levels one way or the other, I think you'll have a better idea of where the next major move is. In the interim, you've got to take what you can get. So if you'd like to learn more, optionprofessor@gmail.com. And again, thanks a lot for having me here today.
All right. Thanks, Jim. And Fausto, closing thoughts, anything you want to share?
Yeah. So anyway, once again, Time Research, thanks for having me here again. I always look forward to being here. If anyone to find out more, if you're interested to learn a little bit more about what is day trading, what it is, and honestly, to everybody here, trading is not for everybody. Swing trading might not be for you, day trading might be for you, but you should at least try it and hear a little bit about it. Every week, I do a live 1-hour presentation to teach you more about, how to use level 3 trading, how to shadow dominating market makers, how you get shaken out. So feel free to just visit our website, cybertradinguniversity.com. You could get the tape reading course. You can join a week in our trading room, which is the original trading room that I started 25 years ago. And also, every week, depending on when you're listening to it, every Wednesday or Thursday, in the middle of the market hours, we do a basic open house where we invite a lot of the traders to come and talk to our own personal students and traders and teach a little bit about what trading is all about. So if you want to learn a little bit more about it, the next one's coming up on Thursday, May 17th. And like I said, we do it every week. So feel free to constantly updates and feel free to email me if you have any questions. FaustoP@ctucorp.com. Thanks for having me, guys.
All right. Hey, good to be here with you, Fausto. And again, I'm Dean Jenkins, followmetrades.com. And I'm showing my website here. It is followmetrades.com. And you're welcome to come check it out. And good way to get to know what I'm doing is sign up for my free market analysis newsletter, Beyond the Noise free. You can just sign up there and get my updated analysis on S&P 500 gold and oil and individual sectors every week. So that is a wrap. Thanks again, David, for putting it all together and having us here. I enjoyed it. Back to you.
All right, thanks, guys. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, the Monday Crowd Forecast News Show is going to be off again next week because of the holiday. But Analyze Your Trade episode number 36 will be May 29th at 4:30 Eastern. Mark Sachs from RightLineTrading.com will be on for the first time, and also Matt Buckley will be on that episode. And so just wanted to thank my guests again for this week. As I said at the beginning, Todd Mitchell of Trading Concepts, Inc. was supposed to be on today, but we'll try to get him scheduled again for another show soon. And Jim Kenney of OptionProfessor.com, Fausto Pugliese of CyberTradingUniversity.com, and Dean Jenkins of FollowMeTrades.com. Thanks, guys.
All right. Thanks, David.